Greetings, my dear students. This is Balakrishna again from BALAS Accountancy Special Classes. Well, from now onwards, those students of CA Foundation course as well can join and watch my episodes. From episode number this BSE 0 to 9 onwards, I have been focusing on final accounts. I have a request. For the purpose of covering this final accounts chapter, I repeat the final accounts chapter. Kindly ensure that you have watched my episodes, final accounts, beginning from BSE 0 to 9 onwards in a systematic way, so that each episode will be more and more effective. As already informed in my previous two episodes, I've scheduled special 12 number of final account sums, 2 each in every episode beginning from BSE 031. The current one, BSE 033, is also having 2 practical sums worked out. Those of you who watch my channel in your mobile phone, kindly use an earphone or headset so that the sharing section of my videos also will be sufficiently audible. Well, in this episode also, I will be working out 2 practical sums of final accounts as usual for you. Let me switch over to my sharing section. Thank you. Well, students, first question of the day, question number 31, page 22.106, DK Goel, edition year 2019. And please note that this question had been set as CS Foundation, June 2010. So it has to be a standard question. Well, at the outset, you see that they have given us a tally trial balance. However, figures are in thousands. Okay. So let me at the outset convert it into proper figures. Yes, I have converted it into proper figures for your convenience, right? Please take it down. From the following balances extracted from the books of Karen and additional information, prepare the trading and profit and loss account for the year ended 31st March 2010 and also show the balance sheet as at that date. Okay. Well, I am posing the questions sufficiently so that, as usual, those of you who could not manage the question can write it down. That will be very much convenient for you. It will make you very comfortable to watch this video. Okay. Well, it has got 1, 2, 3, 4, 5, 6 adjustments, right? And as usual, for your comfort sake, I have colored the items suitably. Blue, violet one for trading account, red one for profit and loss account, and the remaining one, black balance sheet. Okay. Right. So what I should do now? I need to explain to you the adjustments first, because basic things you are very comfortable now. How to go about, how to prepare a balance sheet, or how to go about a final accounts, you know. Now my task is to expose you to more and more complicated adjustments. This is moderately complicated. Okay. So one by one, let me explain to you. Number 1, closing stock. A number of times I explained, show in the credit side of the trading account and show in the asset side of the balance sheet. Oh, what? And also, it has got another annexure also. Goods worth rupees 5,000 are reported to have been taken away by the proprietor for his personal use at home during the year. Well, students, whatever the language is used, what is in content in stock taken away by the proprietor for his personal use, 5,000. Deduct from the purchase in the trading account. Add to the drawings in the balance sheet. Oh, what? Number 2, interest on investments rupees 5,000 is yet to be received. Add to the existing interest received in the credit side of P&L account. It's an income, right? and show in the asset side of the balance sheet. It's a current asset. That's all. Yet another, this too has got, while rupees 10,000 of the commission received is yet to be earned. Please carefully read it. Yet to be earned. Fine. Deduct from the commission received in the credit side of P&L account because you have not yet earned it. That means you are not executed the work what you are supposed to do for earning that commission. You are pocketing the money. So the income is not yet earned. Hence, it's a liability and you cannot conclude to that extent as an income. Show in the liability side of the balance sheet, current liability. Deduct from the commission received in the credit side of profit and loss. Okay. And the third one. Rupees 5,000 of the fire insurance premium paid is in respect of the quarter ending 30th June 2010. Carefully read it. Rupees 5,000 of the fire insurance premium. So that itself is the prepaid part. Okay. Okay. Why it is prepaid part? Because every quarter. Okay. So April, May, June. This pertains to April, May, June only. That 5,000. So to that extent, deduct from the fire insurance premium in the debit side of profit and loss account and show in the asset side of balance sheet. Okay, prepaid insurance, right? And of course, it's a current asset only. Next one. Salaries for March 2010, rupees 10,000 is outstanding. Add to the salaries in the debit side of P&L account. Show in the liability side of the balance sheet and the outstanding expenses, of course, current liabilities. Next. Bank overdraft interest outstanding rupees 20,000. Show interest account rupees 20,000 in the debit side of profit and loss account. You know, interest payable on overdraft is an expense, hence it is to be shown in the debit side of profit and loss account. And we need to pay it. We owe it to the bank. Show interest outstanding in the liability side of balance sheet. It's very much a current liability. Fifth one. Depreciation is to be provided on land and building at rate of 5% per annum and on furniture and fittings at rate of 10% per annum. These are all very much familiar by this time, is it not? Show depreciation in the debit side of profit and loss account, deduct from the respective fixed assets in the asset side of balance sheet. Land and building, 5% of 3 lakh comes 15,000. Furniture and fittings, 10% of 80,000 comes 8,000. Straight case, that's all. And the sixth and last one here. Make a provision for doubtful debts at rate of 5% of trade debtors. So provision for doubtful debts in the debit side of P&L account. There is no existing provision to be adjusted. Nothing is there in the sum. Okay. And show this provision from the sundry debtors as a deduction in the balance sheet. Deduct this provision for doubtful debt from balance sheet. Provision is 5% of 2,50,000. That is nothing but 12,500. Okay. So that's all. Now let us deal with final accounts. You are very much familiar, clear, thorough with all these items by this now. Okay. Open stock. Purchase 9,03,000, less return 13,000, 8,90,000 as of now, and there is a drawings of 5,000, which I already explained to you. So net purchase is 8,85,000. Direct expenses given as it is 75,000. Sales less returns 13,50,000. Closing stock 6,50,000. Hence, gross profit is 4,15,000. You can verify all this at your end. Let me verify whether the answer is okay. Yes, 4,15,000. So that's over. I brought forward this gross profit. Interest 5,000, and there is an accrued interest of 5,000. You hope you remember it. We have already interest on investment rupees 5,000 is yet to be received. So that is what I'm showing here. So this is the full interest. Commission 30,000 less unearned commission. This to be deducted. I already explained. So 20,000. Well, as far as the debit side is concerned, postage, stationery, and telegram as it is, Fire insurance, net of prepaid, 15,000. Salaries, add outstanding. Interest on bank overdraft, 20,000. Is an adjustment given? Is it no? Bank overdraft, interest outstanding, rupees 20,000. Fine. Then depreciation, we already calculated there. Is it no? We have calculated the depreciation 15,000 and 8,000. You can parallelly work it out. Only in case of doubt, only you should resort to my video. Then only you'll get the sufficient confidence and you will make things very clear and very thorough at your end, right? And balancing it. Okay, I find a net profit because credit side is more, 2,49,500. That also I need to verify with the answer. Yes, it's correct. 2,49,500. Next one, balance sheet. Bank overdraft, okay, sundry creditors as it is. Outstanding salary and bank overdraft interest, both are outstanding expenses. Okay, together comes 30,000. Unearned income. Any income for that money received, but you have not worked, means it is called unearned income. So that's a liability. You need to extend your service. Okay. So that's also liability. It is coming here. Capital, original capital, add net profit, less drawings, 50,000. Why 45,000 already given? But we know there is a 5,000 here. Deduct from purchase and trading account, 5,000, and add to the drawing. Stock taken away by the proprietor for his special use. Okay, that double entry action here. So total drawing is 50,000. And this minus this, 4,99,500 is the latest capital. And liability side total is 13,89,500. Fine. Cash in hand as it is, debt is less provision already explained. Also stock, prepaid insurance we have worked out. Accrued income 5,000 I have already told you now. Hope you remember that interest on investment rupees 5,000 is yet to be received. Okay. So that is also there. Investment is there. Land and building, less depreciation. Furniture and fittings, less depreciation. Okay, both the sides of balance sheet tally. And I have ensured the proper marshalling of a balance sheet also. Okay. So that's all as far as this first sum is concerned. Let us take up now the second and the last sum of the day. Well, students, the second and the last question number 41, page 22.115, DK Goyal, edition year 2019. 31st March 2017, accounts to be finalized. We have been given a proper trial balance. I am posing the question as usual. Kindly write it down. Those of you need it. Okay. And the remaining part. Well, it is followed by 1, 2, 3, 4, 5, 6 number of adjustments, and the answer hints to have been given. So what I have to do first, as usual, let me make you people very comfortable with the trial balance allocation. Blue, violet item trading account, red item profit or loss account, and black one balance sheet. Okay. Here, a calculation is there. Practically, it's an adjustment only. We'll be taking it up. Loan to Mr. Ram Narayan on 1st November 2016 at a rate of 12% per annum. Indirectly, they're insinuating that please take care of the interest part. Okay, we'll deal it. Now, the middle thing, adjustments, close stock. I don't want to repeat it. You are a master by this time. Second, goods costing rupees 8,000 were sent to a customer on sale or return basis for rupees 10,000 on 30th March 2017 and had been recorded in the books as actual sales. So, sale is not yet concluded. It is so apparent. Hence, since you have taken it as an actual sale, deduct from sales and also from debtors. Why? Because it's a credit sale you are recorded, is it not? So entry was debtors to sales. So it will be sales to debtors. Deduct from sales as well as debtors 10,000 rupees each, the value of the sales. And the costing, goods costing 8,000. Okay. Goods 8,000 at a profit for 10,000 you wanted to sell it. That goods is in the custody of where? With the customer. Since I am taking off the sale, the good belongs to me. So let me add to the closing stock. So add rupees 8,000 to the closing stock and show the revised value of closing stock in the trading account, because some closing stock amount they are given. This 8,000 also should be added. Okay. So that amount will be, this 50,000 will get added with this 8,000 rupees. Okay, fine. Next one. Allow 8% interest on capital and charge rupees 3,000 as interest on drawings. Well, interest on capital, 3 lakh being the capital given, 8% of that is 24,000. Show as an expense in the debit side of profit and loss account. Business and businessman is different. The very first thing in my first episode, BSE 001, what I told you, the fundamental thing one has to know, business and businessman is different. Interest on capital is an expense from the point of view of the business. So show as expense in the debit side of profit and loss account, and belongs to whom? Businessman. He is represented by capital. So add to the capital in the balance sheet. Interest on drawings rupees 3,000 is the reverse of the previous case. Show as an income in the credit side of profit and loss account. Deduct from capital in the balance sheet, followed by drawings as a deduction from the capital. What I mean to say? Both the drawings as well as the interest on drawings are charged to the capital. Both are to be deducted. Okay. We'll be very thorough when we take up the balance sheet. Depreciate. Business premises by 25%, furniture and fixtures by 20%, and packing machinery by 10%. Tools are to be revalued at rupees 12,000. This is also a way of telling depreciation. They have told that the existing value of the tools is 15,000. It should be revalued to 12,000, means the difference is depreciation. All other things are properly calculated here. Okay. Fine. 2.5% for discounts to be provided for debtors. Well, students, whenever any discount provision is to be maintained, first check whether any provision for bad debts is to be maintained. Well, it is there. So it rupees 1,500 to be provided for bad and doubtful debts. So that of course show in the debit side of P&L account 1,500 and deduct from sundry debtors in the balance sheet. So sundry debtors is 1,31,500. Let me get to the proper debtors. This mistake sometimes students make. Goods on approval reversed. We know that, no? Deduct from debtors rupees 10,000. Yes, that I am deducting, and this is my debtors now. On that 1,500 provision for bad debts I am deducting, and this 1,20,000 is my strong debtors. They are only entitled for discount if at all I offer discount. Well, I am offering, I am providing rather 2.5% provision for discount. That comes 3,000. So in the debit side of profit and loss account, this 3,000 and deduct like this. Okay, in the balance sheet. Fine. Next, this is a thing what I told you in the trial balance itself, an adjustment is indirectly given. Interest accrued on loan to Narayan on 1st November 2016 at rate of 12% per annum. Calculate the interest. 10,000 is the amount, 12%. November 1st, November, December, January, February, March, 5 months. So 500 comes. Please work out at your end. Okay. And what you will do with this amount? Show in the credit side of profit and loss account. and also being a current asset, show in the asset side. So that's all about the adjustments. Now let me move to the proper account section. Right. Trading and profit and loss account. Wherever you need explanation only, I'm supposed to tell you. Well, it's nothing as such. Okay. Sales, of course, the 10,000 on approval basis we are reduced, and we are showing here. Closing stock also the cost of that relevant sale. Okay, I already explained that stock belongs to us only now, so that is also added. So this is for all practical purpose the closing stock now. And my gross profit is arrived at as 2,85,000, which of course I need to convince you is 2,85,000 over. Next one, profit and loss account. I brought forward my gross profit. Interest on drawings is an income. Interest accrued on loan 500. These are all very much available in our adjustments. Is it not? We have already calculated all this 500. Okay, so that I'm taking, and also interest on drawings rupees 3,000. So I'm showing the respective figures here in the credit side of profit and loss account. Salary, rent, office wages. Wages mean just don't put into the trading account. They have bifurcated it. Okay, office wages pertain to the profit and loss account. Okay, so I'm showing it here. Interest on capital we have calculated. Depreciation I have already calculated and shown to you. How I not shown you? Okay, these are the depreciation parts. Okay, that is just shown there. That's all, right? Total is 27,000. Provision for bad debts 1,500. Provision for discount 3,000. Okay. Heavier side, income side, put it here. Difference is 1,19,000. That's my net profit. I'm transferring to capital account. That's all. Well, as far as the liability side is concerned, bank overdraft as it is, bills payable as it is, uncredited as it is, secured loan 20,000. After this current liabilities are shown, I'm showing this security loan. Okay, it's a non-current liability, right? Capital, this was the original capital, are the net profit, and also interest on capital. These are the things which is added to the very capital, and drawings as well as interest on drawings. Mind, I told you, I'll show you here drawings and interest on drawings, two successive deductions, and I get the latest capital. Fine. 3,80,000 and 4,85,000 is the liability side total. Move to the asset side. Cash in hand as it is, bill receivable as it is, sundry debtors 1,21,000. 1,31,500 is the given figure in the trial balance. However, that approval basis has reduced the debtors by 10,000, that it has come to 1,21,500. Let's do successive deductions. Provision for bad debt 1,500. Provision for discount 3,000, and this is the latest figure. Okay. Loan to Ram 10,000 and accrued interest. Okay, he owes me 500 rupees by way of interest. So practically his loan is now 10,500. Closing stock, we already told latest value is 58,000. And all these assets are subject to depreciation, and the net value I have shown. This side also 4,85,000. Okay, so well, students, two sums as usual I worked out and I explained to you. Okay, I hope things have been satisfactory to you. Please practice the same again and again. Practice is essential as far as accountancy is concerned. Okay, the more you practice, the more confident and thorough you will be. Well, my dear students, take care of yourself. See you soon in my next episode. Thank you.